Welcome back to Liberty and Finance. We're always delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals, and he joins us for this weekly market update. Today is Wednesday, September 26, 2024. Andy, thanks for coming back on Liberty and Finance.
Hi, Dunnigan. Good to be here, my man.
Very
We
grateful for
haven't
your
been
presence
swept
here.
off. We haven't been swept off the planet yet with this impending hurricane. Good thing I'm on the other side. I don't know where you are in relation to its path, but
I'm about 100 miles closer to it than you are. Actually, it's Wednesday the 25th. Sorry, I mumbled the date. But yeah, no, it's a couple hundred miles west of us, out in the middle of the Gulf of Mexico, heading pretty much due north. So we are getting rain and wind, but not anything I think more serious than that here. We
yeah,
hope.
that's good. I just had to put down the giant umbrella, and button it up but that's about it. Wind and rain on this side too. We've been lucky, knock on wood. The last since we've been here for going on 4 years, the hurricanes have all been over on that side. Feel bad for them on that side, but I have yet to experience one. When I moved here, I said to some of the guys I golf with, "Gosh, coming from Minnesota, I'd kind of like to see what a hurricane's like." They're like, "No, you don't. No, no, you don't. Don't ever wish for it." Anyways, I'm glad you're out of harm's way for the most part.
Yeah, and actually, on our 10th of 10 trips down to Florida looking for homes, we actually were notified halfway down. We were about half a day out of our destination that Hurricane Ian at that time was heading in and was going to come directly across where we were going to be staying. We called ahead and found out that the resort where we were going to be staying while we were looking for houses was rated for Class 5 hurricanes. They had a huge indoor lobby areas. They were planning a skeleton staff was going to have to stay on for 72 hours straight and feed us and everything. So we knew we'd be taken care of. We thought, well, nothing like finding out what it's like to weather a hurricane in Florida than to put yourself right in the middle of one. Although not everybody has those kind of accommodations, and when the power goes out for days or weeks, can really change everything, or when your entire storm surge hits your town or whatever. But this was centrally located in the state, so it's a couple hundred feet above sea level. Anyway, glad to know that you're out of
At
harm's
least we're
way.
not getting blizzards, though. Back
Oh
then.
yeah, we know those well, don't we?
Right, right. That's good.
Well,
Anyways, good to be here.
and your presence here is always highly valued. I learn a lot always, as do all of our viewers. We have a whole bunch of
Thank you.
people here on the live chat. Guys, if you want to be in the live chat and ask a live question of Andy tonight, you've got to be subscribed to our YouTube Liberty and Finance channel. Be on YouTube, watching this live stream, and then go into the live chat underneath there. You can ask questions of Andy. We're going to try to get some in front of him later in the hour. And two main topics we want to make sure that we hit today, in addition to whatever's burning on your mind, Andy. And one was the World Gold Council put out a report, which is actually very interesting. It was a survey of central bankers all around the world, and whether they're buying gold, how much they're buying, how much they're planning on buying next year, why they're if they are increasing or decreasing, why they are. And it was a fascinating read. And for those people who haven't had a chance to look at that, we're going to take a glimpse into that and talk a little bit about it, because I think it's absolutely eye-opening for people to understand that, as you've often said, people that are the best informed and best connected are actually taking preventive action absolutely at
For
this time.
sure.
Second topic is from our good friend Rafi Farber in Israel, who has announced over the past week attempts by the Israeli government to outlaw the possession of certain quantities of precious metals, gold and silver in particular. And all the excuses and the rationalizations they're using for that are, to me, the most enlightening, especially given the perspective that we've just been through over 4 years of having our constitutional rights trampled in our own country and seeing that happen around the world. So we'll touch on those two topics, but also want to get into viewers' questions. And also, I'll just give you, Andy, before we get into either of those topics, if there's anything that you're looking at in the past week here for this weekly market update that a lot of clients were calling me, are asking about, what about this all-time high gold price, gold hitting all-time highs day after day and holding up remarkably in the face of so many things that are going on around the world geopolitically, et cetera, financially. If you could give us your update on the things that you're looking at the most closely, then we'll get into those topics that I just mentioned, and we'll get any viewers' questions we can as well.
I mean, you in terms of gold holding up, it's held up in the face of positive real yield for the past 2, 3 years. It's held up or 2 years anyway. It's held up in the face of a strong dollar, and it's held up in the face of declining ETF outflows, as we've seen, like you're skiing down the Swiss Alps in terms of outflows. And now we're seeing the ETFs just start to pick up again, which is for the first time in 2 years. You're seeing reports like on Goldman Sachs that their trading desk is being inundated with gold requests, and the ETFs are starting to pick up. At the same time, we're seeing Powell pivot by 50 basis points. And they've been touting all along such a great economy and strong labor market. We know that's a lie with the revision of over 1 million jobs between the 200 or 300 they revised during the year and the 818,000 they revised after the year. We understand that it's a lie when they tell us that the CPI is 3.3% or whatnot, and John Williams tells us it's much more. And so pivoting in the face of all of these lies, when they tell us that they feel confident that they've reined in inflation, yet they're 65% away from their target of 2%. It's a lie. And yet it, to me, speaks to the fact that they're very concerned. Now, as far as gold, we've had outflows on the ETFs. We've had a positive real yield. We've had a strong dollar. And we've had massive central bank buying. Now, all of a sudden, you have ETFs moving up and you have yields moving down. And you have a realization by the world that, all is not well. And I say that to you because immediately after he lowered the rates by 50 basis points, the bond market, the back end of it sold off, meaning rates went higher because the world is saying, at what point do we get tired of a country that's going as deeply into debt as you are, with all of the other issues that we've talked about ad nauseum, and at the same time, you now have the hubris to actually lower rates. They should have never lowered rates. They should have continued to raise rates. They've never even squashed the inflation bug, which is only going to get worse and worse and worse. Now, you look at that in terms of the price of precious metals, that hasn't even been fully priced into the equation yet, as far as I'm concerned. The American public has been largely asleep at the switch. And if we see a broad participation increase, as we've talked about forever, the 0.5%, if it increases to 2 or 3 or 4%, as paltry as that sounds, represents a substantial increase in demand. I don't think that the markets have even begun to price in things such as the rolling out of a BRICS settlement currency, such as the American participation. And there's an article that I just read by what's his name? Kuz Jansen, I think it is, and he was talking about how all the BRICS nations countries are accumulating lots of gold in those that are tied to Project Enbridge. Well, no doubt, and we've talked about why they've all been bringing it back and why they've all been buying. We find Saudi Arabia, who's straddling the line here, accumulating 160 tons of gold. Well, who cares, right? Well, the people care because they didn't report it through the normal chains, like through the IMF, and instead it was the Swiss import-export numbers that flagged it. They're straddling the line. They've become full participants in Enbridge, but kind of hedging about their full participation in BRICS. They don't want to upset the apple cart, but the apple cart is going to turn upside down very soon. I did an interview yesterday with a guy from the UK, and he said something really interesting, and I thought about it. And I just wanted to throw it out there because I think it's fascinating when you think about, I've done these little comparisons for years. I've talked about the house price in 1960 versus today. I've talked about, back in 33, the cost of a men's suit with a $20 gold piece or a $20 gold certificate. But he said to me that in the United States, that the money printing, which is inflation, an increase in the money supply, takes, due to the Cantillon effect, it takes time for it to work its way through the system. But an increase in the money supply is what causes price inflation, by and large. And he said, the money creation in the United States has averaged roughly 7% for the last decade. Okay, that's the average. Well, the law of 70 seconds says what? You take the interest rate and you divide it into 72. It tells you how long before your principal doubles. Or in this case, if inflation or money creation is running at 7%, our currency has been cut in half in value over the last 10 years. And if what he's saying is true, that is a true statement. If he's saying 7% by and large money creation, and I think, what's his name? John Williams might say that's even underestimating, but let's just go with it for a moment. And so we talk about gold, and a lot of the financial advisors who will listen or talk to people who have portfolio in gold. Well, why would you own that? No interest. It's a positive real yield on the 10-year treasury right now in the 6 month. For goodness sake. Um, they don't know what they're talking about, because not only has it outperformed the 10-year treasury for the last 25 years, but here's a cool little experiment. You see, if if this is my mug, this is an ounce of gold, even though it's an ounce of silver, and it's hanging on the bathtub, and the water drops out from under the bathtub as you pull the plug. Gold didn't go higher, the water went lower. And that's what I'm saying about the currency here. It's not that gold is going to make you wealthy. It's that it maintains your lifestyle or your standard of living. And let me paint the picture. So if indeed what he is saying is true, over the last 10 years, 7% into 72 would tell us 10.2 years, currency's been cut in half in terms of its purchasing power. Okay, if that's the case, what has gold done? Go back 10 years, gold was $1,200. What's it today? 2660. It's gone up more than double. So it's retained its purchasing power, not by it hasn't made you wealthy. It's gone up a little bit higher than the dollar has fallen. And so that's the whole idea with buying gold and silver. When I talked about it is wealth, it's not about becoming wealthy. It is wealth. Yeah, it's outperformed a lot of investments, and it's done very well, but it's only just really kept up with the falling of the dollar. And I just want people to understand that as we talk about gold and silver, as I always talk about it. That's really where I'm coming from. And I think it's an interesting way to look at it. And you go back, look at the price of a house in 1960 versus what it is today in the number of ounces of gold. You go back to Roman times, you go back as far as you want, and it's the same thing. So anyways, I just thought it was a neat thing that it worked out almost exactly the right way over the last 10 years.
Amazing and also illuminating. I know we just did an interview with David Morgan. He said that when he first started writing silver and gold investment newsletters, gold was at $250 an ounce, and he was uh, cal
2002.
and he calculated based on the money supply at that time versus divided by the ounces of gold above ground available gold for investment, that it would be to fairly price in the money supply would cost $2,500 gold. So he put out a call based on fundamentals for $2,500 gold. People called him crazy. Now we're at 26 plus on gold, heading for $2,700. And then he says if you do that same calculation today, you get $27,000 gold. So call him crazy again, but do pay
That's
attention
the
to
same
what
number
history and
James
mathematics.
Rickards comes up with
Yeah.
using M1 money supply. That's the same number he comes up with. Just a couple of other things I thought that were newsworthy, of course, and I don't know if we've talked about this already. I don't think we did, but it just came out that India's silver import numbers, which last year was a record year for them. The first half of the year, they imported 560 tons, which was a lot. This year, that number's up over sevenfold. They purchased 4,554 tons of silver in the first 6 months of this year. This is the acceleration. We've talked about China, the second largest producer of silver in the world, flying around and buying up doré and concentrate. Now you have India buying anything that is not nailed down. And when you go back and look, 2 years ago, we began to see a divergence, which was very unusual. And that divergence was a downward sloping ETF market and an upward sloping gold price. And that was very unusual because normally they would follow one another. And now we're beginning after 2 years to see that turn up the other way. I don't think the market has yet to really understand the power of the American investor should they wake up. And it looks like they are waking up. Question remains to be seen to what degree. What degree does this happen? I don't know. But what kind of questions do we got?
Yeah, I just wanted to tack on three things there about the American investor waking up, three things that have happened in the past. First of all, when gold continues to knock down the door of all-time high after all-time high after all-time high, day after day, week after week, month-end close after month-end close, the mainstream financial press eventually cannot that they get dragged into talking about something that their keepers would rather that they not talk about. They have to, and that does start to wake up the public. We also see two other signs of it, and that is both Walmart.com and Costco.com carrying 1 ounce gold bars periodically when they can get them in stock. And they usually say that they sell out within hours of them putting up online. So again, this is one more evidence, small piece of evidence of the mainstream going to be exposed to this and the reawakening that has happened every time in the past because of that. The next thing I was going to talk about with you was the 2024 Central Bank Gold Reserve Survey. I'm going to put that up on the screen here real quick. Folks, there's a link to this uh, in the description of this video, so you don't have to wonder how to do this. I'm going to get this up right now for you. Hold on, I'm going to close this for the moment, and we're going to do this. Share. For some reason, it's only showing me. There we go. Got it. Okay, here we go. Okay, you should be seeing that now. 2024 Central Bank Gold Reserve Survey. The link to this is in the description of this video, so you can take a look. You can download it. Each of these charts in here you can download quickly, but I just want to whip through these because I want you to think about, guys, as Greg Romanarino, who the founder of TradersChoice.net, whom we interview often on our channel, talks about. He says, become your own central bank, acquire real assets. So think about this when we talk about this is what the central bankers of the world are reporting to the World Gold Council. So if you want to become your own central bank, this is how you need to be thinking. This is what the big boys are thinking. Chart one, what proportion of total reserves, foreign exchange and gold, do you think will be denominated in US dollars 5 years from now? The 2022 to 2024 responses are shown. So that means if you want to see a trend here, look to these sort of magenta or pink ones. That's the 2024, and you'll see that there's the highest number here. Think that the portion of total reserves will be denominated in US dollars 5 years from now will be moderately lower, is 49%, significantly lower, 13%, big jump, more than double, almost triple who said that last year, and more than triple who said it 2 years ago. And unchanged is dropping. Moderately higher is dropping. Significantly higher is small. It's the smallest of all of these. So if you look at that, the biggest portion say it's going to be moderately lower to significantly lower of US dollar portion of total reserves for countries. Andy, I don't know if you have uh, any comments on that before we jump into the next chart about what
Well, yeah, I
portion
mean, you
gold
look
takes.
at for the first time ever, the euro has now been replaced by gold as the number two largest holding in foreign exchange reserves, only behind the dollar. And so, yeah, I look, the Western currencies are inflating away, and they're weaponizing. So why would any of these other countries that are not G7 friendly have any interest other than having no other choice to transact business globally, at least for now? Why would they want to hold dollars or euros when weaponization and inflation are par for the course? So, you reap what you sow, as far as I'm concerned.
And I just wanted to underscore one thing is that, you have Andy and me and other guests on our channel and independent media talking about this trend, the US pivot away from the US dollar. Here you have it right from the pen of central bankers around the world who are reporting into the World Gold Council. The next question is related. That's what portion of total reserves, both foreign exchange and gold, do you think will be denominated in gold 5 years from now, not the US dollar, but gold. And again, the trend 22 to 2024, significantly lower. It's the smallest number, second smallest number here. Moderately lower is slight. Unchanged is bigger, but the biggest of all and higher a trend rising 3 years in a row here is at 66% proportion of gold reserves in total reserves in gold will be higher, say 66% of the world central
And if
bankers.
I had to argue, I'd say much of the information that the World Gold Council gets is fugazi, in the respect that, um, like for example, China. They tried to tell us they weren't accumulating gold. They used to keep
Hmm.
their gold numbers pegged around 1,200 tons for years and years and years. Yet they produce more gold than anyone in the world. If gold is accumulated by the People's Liberation Army, it's not reported to the IMF. If it's purchased by the PBOC, it is. If it's purchased by a proxy bank on behalf of the PBOC, it's not reported to the IMF. If it's purchased directly from the refiners by the PBOC proxy banks or in South Africa or Switzerland, it's not going to get reported to the IMF. And if gold is under 995 pure, it won't get reported to the IMF. Think of what they're doing with silver. I'm sure they're probably doing with gold too,
Mhm.
where they're flying around and buying doré and concentrate, which is not pure. And then they are refining it at home. That's not getting reported. I mean, and they're the second largest producer of silver in the world, and they're doing this. So when we talk about their efforts to hide how much silver they're accumulating, they're doing the exact same thing with gold, as are many of these countries. Look at Saudi Arabia. Saudi Arabia purchases 160 metric tons and tries to hide it, but the Swiss export numbers caught them. Well, if they had done it through a sovereign wealth fund, well, they probably would have got away with it. Anyways, the bottom line is that I think these numbers are a good indication, but I would say massively understated.
Yeah, and again, as you point out, with gold being a strategic resource, and these countries of the world know it as the art of war, which you've quoted from several times to us, says, appear strong where you are weak and weak where you are strong. So it's very likely that these numbers are understated for
Totally,
strategic reasons.
100%.
Chart three, how do you expect global central bank gold holdings to change over the next 12 months? So they're talking about everybody in general. What do they think about their entire peer group of central banks around the world? And if you look at it, this is a 6 years, so it's a 5-year trend history from 2019 up to 2024 at the top. And the increase is the dark blue and remain unchanged as green, decreases pink and blue don't know. And you can see that this is the biggest year on record for the past 6 years. 81% believe that global central bank gold holdings will increase. That is dark blue, increase here in the next 12 months. So this is central bankers reporting that they think among all central banks of the world, among their peer group, that global holdings of gold will increase over the next 12
Well, I
months.
mean, look at the evidence. Weaponization, inflation, and a new settlement currency pegged to gold. I mean, and what is gold but the only other tier one asset in the world?
Right, and that's going to come right up in a minute, and the one without the counterparty risk.
Right.
Chart four, how do you expect your institution's gold reserves to change over the next 12 months? So this is not their peer group, it's themselves. This is their self-reporting, and I guess this gets to be the most touchy, right? As far as strategically revealing. So again, here's the trend, 5-year trend from 2019 to 2024. Look at it yourself. Increase, 29%, the highest year on record for saying that they individually will be increasing
Yeah, yet
gold.
they're saying it's an 85%
Yeah,
chance or
isn't that interesting? Yeah,
81% chance.
everybody else
It,
could be doing
it's just
81%.
that's just it. It's like that's like saying to a doctor, you want to, I have this friend and he's got this problem, this friend of mine, and well, but when it comes to me, no, it's not me. No, it's not
Yeah.
me. And that's again, understated. I think all of these, whether it be the World Gold Council or the Silver Institute, might be very well meaning, but I think the
And,
information is biased and understated. And it goes back to the exact same thing, how China has never reported, or why haven't we allowed a audit of Fort Knox in 70 years? So these are all these are all good indications, but I would say the numbers are vastly understated to the true reality, which would then make this far more bullish than it actually is.
and frankly, I find the next few charts to be the most revealing because I think it's a very cleverly phrased questions because it doesn't say, what are you going to do? It says, what factors do you think consider are the most important? Because then it reveals that the thinking that they're doing, which I think is much less threatening for people to answer bluntly. Chart five, what topics are relevant for your reserve management decisions? Select all that apply. And so this is all countries, advanced countries versus emerging markets. And you see that this first one is very hard to read the print here. I'll read these out to you. The highest two here are interest rate levels, inflation concerns. Okay, those are the top two concerns that are most relevant for how they manage their reserves. Next is geopolitical instability. Then a huge drop down to ESG issues and shifts in global economic power and so on, technological innovations and so on. Then the next one, how relevant are the following factors in your organization's decision to hold gold? So this is not just reserves in general, it's gold specifically. And It's highly relevant is blue, dark blue, somewhat relevant is green, marginally. So let's focus on the highly relevant, the few that stand out there that just jump out at you. Highly relevant, it
No
says it has
default risk.
no default risk. The next that's highly relevant is its performance during times of crisis. Very
Okay, now let
interesting
me just
word.
stop you for 1 second. I want everyone to remember that supposedly this is an interview or a not an interview,
Survey.
a survey of the most well-informed traders on the planet. Um, so keep going. I'm sorry. Just keep these are
No,
the
but I
people
think
that
just think about the
understand what's
implications of
coming.
think
They
of the
know what's
implications of
coming.
that. No
They're the
default risk.
same people that implemented Dodd-Frank and this in to a degree, I guess they're not, but they are, and Basel III and all of these and bail-in legislation. I mean, this stuff's coming. And sometimes I feel sick and tired of being the little boy who cried wolf. But if this doesn't tell you, man, that the most well-informed traders in the world are telling you their biggest concern and why they would own gold is default risk
Yep.
and
Performance
what's the
during times of
geopolitical
crisis.
risk and what?
Performance during times of crisis.
Yeah, there you go. Well, there you go. And we're less than 4 weeks away from the BRICS meeting in Kazan, and 2 weeks after that is the biggest election in our history, maybe one of the two anyway. And you know, I'm sure there's no coincidence that they've been buying gold at record pace.
So and I think that's absolutely key. If you think about the most informed and powerful, those who can influence and are trying to take care of their nest egg and protect themselves and their organization, et cetera. And they're saying that their highest concern right now is default. In other words,
Yeah.
others are going to default against them. Or secondly, performance during times of crisis. It's like it's time to realize that those that are saying, "Oh, it's just a pet rock. Oh, it's just a historic relic, et cetera," are um are not telling the truth about what
I
the
don't know
people
if
who
you
are in the
saw there
decision.
was it was going all around Twitter, and I don't have it, but I'll tell you what it was. Basically, there was a trader for Goldman Sachs, I believe, and he said in 2015, and they go back and show the date. So that's he's like gold. Let's just face it, gold is a pet rock. It's dead in a pet rock, and it's doubled since then. So there you go when you talk about your mainstream analysts or analysts and who are married to a philosophy whereby they know more and more about less and less till they know everything about nothing, focusing singularly on a certain criteria instead of looking broadly at what's happening and unfolding. And this is different than anything this country's ever been through, or at least in my opinion, it is. Not only, you could say some things repeat and are similar, but it's what's happening inside the country, the lack of unity and the divisiveness and red and blue and all of this stuff that really is going to make the next 8 weeks challenging, as far as I'm concerned, on many levels. Expect great volatility in the metals market, in the stock market, the bond market, if not at much else.
Now, I want to bring up the reason that we wanted to bring up together with this. We just talked about opinions about gold ownership and actions about gold ownership, to actions that are being taken right now about gold ownership by the most uh, those at the helm of the economic world versus this story that just came out of Israel saying the government is saying that individuals they're trying to make it illegal for individuals to hold gold and silver and as Rafi Farber reported to us. And the thing that keyed out to me the most about that story was not that it's happening, but that the rationalization that the government was giving on why they thought this was a dangerous thing and why they thought it was a bad thing and a destructive thing and how they were trying to motivate their citizens to basically turn against those who are in favor of holding gold, or because they also see it as a form of cash, as Rafi pointed out. And it echoes things that we have seen coming out of our own government. You look at FDR saying that people who were hoarding gold back in the 1933 were holding back progress in the economy. We're keeping the economy from growing. We're keeping things stagnant, and they had to liberate this money, get it moving, and so we turn it over to the government so that they could do things with it to get the economy back on its feet. So in other words, those of your neighbors, friends, and family that are hoarding gold are being selfish and they're dragging down the whole country. No mention of the decisions by the banks or the elites or anything that got them into the depression as our good friend Wayne Jett, author of Great Depressions Then and Now, Fruits of Graft, talks about how FDR actually caused and worsened and deepened the effects of the Great Reset, the Great Depression. But then also, even during the last 4 year lockdowns and everything that we've all been through, how people were turned against each other, saying, you should report if any neighbors, friends, or family members are having these large gatherings, and you should, call
Well,
people
Governor
out if
Walz
they're.
was front and center on that.
Say it again.
Governor Walz was front and center on that,
Yeah,
even
and
during Thanksgiving.
yes, right. So it's this playbook that we keep seeing where those in charge are actually trying to come up with a scenario to justify why they're putting clampdowns on and taking away people's rights, the things that they're not obeying, things that they're not adhering to, things that are clearly not based on principle, not based on science or learning or anything like that, but just based on controlling. And now in a few years ago here, John Adams from Australia says that economists down there who we've interviewed said they were trying to enact a $10,000 cash transaction ban in Australia. He fought it with his team, and they got allies in the legislature and in the media to come on their side and got that thing overturned. But the rationale that the Australian government was using to ban $10,000 more cash transactions was absolutely saying it's criminals that are using this, and so we got to get rid of this to get rid of criminals and criminal activity, and anybody who has nothing to hide shouldn't have any problem having all their transactions tracked by the government, because it's these secretive, collusive and elusive criminal activity that's going on with cash. That's why we need to get rid of these large cash transactions. Okay, so fast forward to today, this week, in the country of Israel, the government saying that citizens should not be owning gold and silver because, get this, because they're tax cheats. And the reason we have to keep raising your tax rates, everyone, is because of these tax cheats. And if people would just stop using cash in a black market economy and hiding their transactions from the government so that we can't tax them, we have to raise your taxes because of that. But if they'd stop doing that, because it would be fair, we'd get everybody above and beyond, above board, make everything nice, clear, and transparent. We'd have accountability, and by having everything be electronic transactions, it can all be properly monitored, and we can keep good eye on things, and we tax everybody fairly, and that we can lower your tax rate. So those people who are doing this are forcing your taxes up. They're your enemies. These people that are being secretive. So you want to be against that and for us, because we're trying to make things fair and open and transparent. So how do you like that? You're either
Well,
you're
I
either
know
a
it's a proposal. I know it's being talked about. It's not an edict. God forbid. And what would it say for things like Bitcoin too? I mean,
yep,
if they're
and
going to,
Bitcoin can fall into that as well if
well,
it's
if
not
they're
if
going
it,
to try, they're doing that to trap you into the system, into the monetary system, and that is always a possibility. Desperate governments do desperate things. In 1933, in the United States, it was in everyone's pocket. It was currency. It isn't any longer, but you could make that argument that the people who listen to this show, to the people who listen to me, to the people who buy gold and silver, are exactly that. They're doing what they can to protect themselves against the mismanagement of our monetary policy, or for the fiscal irresponsibility of the US government. And yet you have the idiocy of our leaders who try and blame greedy grocery store owners for price gouging, when it's the increase in the money supply and the greedy government creating so much money, to the tune of $1 trillion every 90 days, or roughly $100,000 a second, 24/7. That is creating the problem. And I would like to hope that cooler heads, smarter heads prevail in Israel. I would like to think that that's not coming here. I actually was talking to my dad about it today, and he says, well, maybe, we should, rekindle our relationships that we have with entities in Singapore and Switzerland. I said, well, we're very good friends with the people in Switzerland. We could call the people in Singapore and rekindle those relationships. We don't do much with them anymore. But what good does that do? If they make it illegal, they make it illegal. And the same thing is true with Bitcoin. I was talking to someone today, and he says, "Well, it still would just make Bitcoin go to the moon." I'm like, "Well, no, it really wouldn't because again, well, you can hide in Bitcoin, yeah, until you come back out into the currency of the realm." And the same thing is true. I said with my dad. I said, "Look, if it comes down to eminent domain, well, you end up trading your gold in for as fair of a price as you can hope to get." I don't know what else to say other than to say it's always been a possibility. I don't think it will happen. I'm shocked it's even being brought up in Israel, but gold is taking on a very relevant role in much of the world. And when all of these nations have for a very long time allowed and or promoted gold ownership, for the center of free trade to do that, the world reserve currency for the United States to do that, it would be game over. And that's why I've always thought that the way for the United States to do this and have their cake and eat it too would be to confiscate the ETFs. And you got JP Morgan and BlackRock being the custodian of SLV, the largest silver stockpile in the world, company that paid a $920 million penalty, the largest the Justice Department ever handed out for manipulating the market. And they're allowed to be the custodian of the largest silver trust. And it's HSBC and JP Morgan and others that are behind GLD, the fourth or fifth largest stockpile of gold in the world. So they just simply take those funds on a Friday night without having to face this type of backlash, where they would actually do something as draconian as that. And I would like to think that this doesn't pass in Israel, but look, again, desperate governments do desperate things, and this country hasn't witnessed desperation yet because we still have people foolish enough to buy our duration treasuries, and at least it's Ireland and the United Kingdom and Cayman Islands. But desperation can breed these types of edicts, and it gives you privacy. You're outside the matrix, but there are no guarantees. There truly aren't. And I think you have to prepare the best you can and hope for the best. And that's pretty much all we can truly do. And I think that's the most honest answer I can give. I look, if that happens, I'm going to be the person more bummed out than anybody. So let's hope it doesn't, and let's just not let it deter us from continuing to accumulate and do the best we can to get the hell out of the way of what's coming. But it's coming, and that I can tell you, these type of actions only explain that even more.
We have a question here from Pamela Flasted who says, any idea what's going to happen when we go to CBDCs? How do we exchange precious metals with you?
How do you exchange precious metals right now? I mean, basically is a CBDC. It's not like you're giving us $100 bills. You're sending a wire typically, or a e-check, which is a digital representation of your money. It's just a different form of it. And it's like Fed Now that Lael Brainerd ran point for recently and is being piloted around the country on a handful of banks, which is instant settlement by the Fed. And it would be something more along those lines where bang, I just Venmoed you, well, except it's Fed Now'd you, and bang, it's in your account, and it's just a transition from one currency unit to the other. It's, hey, knock it off. Hey, knock it off. Knock it off. Sorry, it's really windy out because of the storm, and I have this front gate that's banging. My dog thinks someone's here. Knock it off, Minnie. My dog's name is Minnie, as in Minnesota. In any case, it's just like when this was money and they took it out of the system, how do people transact for other things? It's just a different form of payment, but I think you have to play within the sandbox that you find yourself in. And if all of a sudden the sandbox changes to a different unit of currency, as long as we're still able to transact business, as long as they don't make it illegal, we'll keep doing it.
We have another question here from Pete, and it got chopped off. I think I see where he was going with this. I hope I get it right for you, Pete. Pete says, when the panic starts, how long will the available gold and silver hold out?
Not long, not long at all. And I don't say that to try and entice you as like a carnival barker. You better hurry up, get here quick. No, that's not what I'm saying. I'm saying that you have two mints in North America, US and Canada. You have a half a dozen or so refineries and private mints. And then the others are around the globe, the big ones being in South Africa, Australia, Austria, United Kingdom. But this will not be immune to just the United States. I could see other countries just blowing up their own sovereign mints, UK and Australia taking care of their own sovereignty, their own people. But if we have 80 or 90 million dollars of inventory, let's say, which is a lot, maybe even a little bit more. Um, there's only a handful of companies that are doing that kind of volume like Miles Franklin, and then most of them are very good companies. JM Bullion, APMEX, SD, Money Metals. These are all good companies. And let's say they all have 100 million. So you got five, six, $700 million worth of product in the major companies. Call it a billion. Well, the amount of money creation that we're seeing, we're doing 100,000 in debt a second in terms of debt creation. So there's so much money out there where these NFL players and NBA players are signing contracts for, 35, $40 million a year. There's so much money out there. If people panic, if Bank of America were sacrificed at the altar, and I could see that happening, I truly could. I mean, maybe there is no coincidence that hey, Warren Buffett just wanted to make a profit and he's pulling out. He still has a big position there. But the point is, they're the ones who've had the big gold and silver short, according to Ted Butler, for a long time, 1 billion ounces of silver. If a bank like that failed and was bailed in, the amount of panic that would ensue in a matter of moments would necessitate people reevaluating their lives, reevaluating what they think is safe. And when a major commercial bank, if indeed something like that happened, we're bailed in. Most people don't even know what bail in is. The amount of demand into the precious metals market in one day would wipe out availability across the United States in one day, just like that. And I've seen it, and you've seen it in the few short years we've worked together, Dunnigan. You've seen it yourself, where I'm not really being sensational on this at all. It happens that fast. And, you know, to get an order for $50 million is unusual, but I've done two of them. And to get them underneath that, we've done lots and lots of them. So how many of those just one company does it before things get really crazy? And we're just one company that, not long is what I'm saying. And I mean that sincerely. It will define this market. People on the outside will say, geez, the price is so expensive. Everyone else who's trying to get it will say it's so hard to get. It's not even funny.
Got a question here from Steve Sapp. How much higher does gold have to go before people shift their attention to silver? $3,000 gold?
Well, what's really crazy about that, Steve and Dunnigan, is that if you would have told me, I've been doing this since I was 19 years old, I'm 54, and you would have told me in 1989 and 1990 and early 2000 when gold was, 250 bucks. I remember just wishing it would get above 400. I couldn't believe it finally got above 400. Silver, 3, $4 an ounce. If you would have told me that gold would be 20, almost 2,700, Gold Eagle, you're paying $2,775, almost 2,800 bucks, and you don't hear squat about it anywhere, I said, you're out of your mind. No, no chance. No way. It's unnoticed, which is the craziest thing to me. If that isn't a contrarian indicator, I don't know what is. It should be on, I mean, it should be front and center all over the place. But yet they do the best they can, the media, just to keep it out of the public's eye. Um, Silver is a better value, though, period. It has been for a long time. Gold doesn't have to go any higher for you to buy silver. Silver is a better value. And I want to explain what I mean by that. We've talked about this silver gold ratio for a long time. How I always would say, well, gold usually goes first and silver follows and follows faster, increases. Well, let's use yesterday as an example of how that plays out. Now, it's just a very small sampling, right? Yesterday, gold was up 30 bucks. It was up 1.1%. Decent day. Silver was up $1.60. It's not as impressive as 30 bucks, but it's 5.1%. It outpaced gold's performance by 5% yesterday. Well, what if it did it for a week, for 2 weeks, for a month, for 5 months, for a year? I mean, who's to say it won't? What I'm saying is that you have 8 commercial banks, and I've said this on your show now almost every week since I saw that graph. And where 8 banks hold the largest concentrated short position in the history of any commodity ever traded. on COMEX. In silver, where India now is going around and buying 7 times the amount of silver they bought in the first 6 months of last year, where China, the second largest producer, is gobbling up concentrate and doré so it isn't recorded. People don't know how much they're buying. We don't talk about how much they're mining. All of these things tell me that silver is the most undervalued asset on the planet. What is it not? It's not a tier one asset. Central banks are buying gold because it's a tier one asset and will be pegged to a new system. But silver is not an industrial metal anymore. It is a strategic metal, whether it's classified that or not. And I think the people who understand where this is going, they very much understand what silver is all about. And they are using the stupidity of the Western manipulation, which is flat out stupid, because the one escape valve that they never figured would be exploited is the opportunity to stand for delivery. Last month in August, 8.1% of the float in the London Metals Exchange, or LBMA, was delivered. 8% of the 300 million ounces that they have available. There's 800 million ounces in the vault, the lowest amount they've ever had since they've been keeping record, but 500 million belong to the ETFs. They're not for sale. 300 million ounces, 8% of that, about 25 million ounces were delivered in the month of August. How much more can it take? And that's the difference, is that the people who are playing this game, they're onto us. And I always say, the guy who's running the BRICS Grain Exchange, we produce more, we consume more grain than they do in the West, yet the COMEX sets the price. We don't have any ability to set price, but that will change with the development of the BRICS Grain Exchange. You don't think they know we're doing this with all of the commodities, especially silver? Why do you think India is doing what they're doing? Why do you think China is doing what they're doing? Wake up. It doesn't matter what the price of gold is. Gold will keep going higher. Silver will be the best performing asset of the decade before it's all said and done. And I say wake up with all due respect. I'm not pointing that at anyone. I'm just saying wake up to the fact that this is an opportunity you don't see very often. Massive upside, massive expanding uses, decreasing tremendously in above ground and below ground availability or footprint. You couldn't ask for, and suppressed to just barely above its all-time high, half of it. You couldn't ask for a better setup for an investment.
We're gonna try to hit two or three real quick ones and then
Don't do
show
it
the
again. Come
special.
on, man. I need a friend.
We got Mark Florida says, can Andy again explain what happens around this time of the year as far as the U.S. Mint production to prepare for 2025?
They'll start right around October, right around Halloween. They'll just shut down. I mean, they've already stopped, as far as I know. They ran out a week or two ago of 10th ounce gold eagles. I have yet to hear if they're going to make any more 1/10 ounce. So normally it's between Halloween and Thanksgiving that that's it. There will be no more allocations on most of the time, and you just have to wait until mid-January to get those. So we'll see. We're a little early yet, but you got about a month before that happens typically.
Okay. Brian Knox says, I retired and flipped my whole 401k into gold and silver IRA. They all said I was crazy. Who's crazy now?
Yeah,
So
right.
any
Well, that's the thing. That's why, Brian, so few people ever succeed in investing, because they don't have the courage to take accountability for what might be the most important thing of our adult lives, our retirement and our future. And they pass that responsibility to someone else. And the funny thing about it is, and I mean this, the people who watch this show are, in many cases, even though they may not have the investment acumen that their advisory does, but they probably have a better understanding of where we're heading. And you can be the smartest guy in the world, but again, if you read the wrong stuff, are you really that well read? Maybe you are, but on things that aren't going to make your life any better or change the course that you're on. And so sometimes your gut is your best financial advisor, and you need to listen to it, because most of us go through life saying, damn it, I knew I should have done that. And that's why very few people ever win. And I guarantee you, when Rick Rule talks about the biggest deal he ever made, he bought and it fell by 50% and he doubled down on it. He was that convicted. I'm sure he had a lot of people saying, you are an idiot. Well, it made him millions and millions and millions and millions of dollars. So in the end, if you believe something, you have to trust yourself and not rely on anyone else. In this day and age, where we are, as unconventional as things are becoming, as scary as things are becoming, very few people see it clearly. And I applaud guys and gals that have the initiative and the fortitude to do the digging, do the research, spend the time listening to knuckleheads like me and you. And I'm the knucklehead, you're not. And and to make their own decisions, regardless of the outcome.
This is a comment again. Father Duck says bank freezes are coming. Wells Fargo is limiting withdrawals, and so is BOA. We've certainly seen more than usual scrutiny on the part of banks when people try to wire out funds that are on deposit. I had a conversation behind closed doors with one of
What's
my
this for?
bankers.
What's this for? What are you doing with it? What do you need the money for? Yeah,
Yep.
right.
Just this week, a client said that they demanded, "What are you using this for?" And I told her, you need to find a firm and polite way to explain to them just to satisfy their fiduciary responsibilities. Like, I've checked out this company, I've worked with them before. They're AAA, they're A plus with the Better Business Bureau, and they've been in business 35 years, and I know who I'm dealing with,
You
and
know what
this is
I
a private
really want to
purchase.
say? I really want to say it so badly, but everyone's going to think I'm a bad guy. And, can I just say it? I'm not going to say it. I won't say it. I won't say it. Out of respect to you, I
Well,
won't say
some
it.
some people have come up with rather colorful
That that's
false
that's that's
description
what I that's
to
what I
to give, and that the
yeah.
the teller may blush, but they'll stop asking questions
Yes.
anyway.
Well, you end up
Um,
you do that, you probably end up getting a suspicious activity report
yeah,
from
yeah, it could
whatever
happen.
you
Probably not a
do.
good idea, but it is okay to say I've checked out this company. I've worked with them for a long time. I'm making a private personal purchase, and that is my business, and I need you to execute my transaction. Uh, Dan Spain says, Andy, will you please touch on and I don't know if you can talk about this, Brinks Dallas project.
It's open. It's open. We can now take storage accounts in Brinks Dallas. It is finally open. For goodness sake, it took so long. So yes, we now have the ability in the United States for Brinks JFK. We're the only ones in Brinks Miami, which is in Doral. We have, of course, Salt Lake City, Los Angeles, and now, as far as I know, we're the first ones in Brinks Dallas, and it is open and operational. You go to our new website, will be very, very shortly rolled out. We have one that was rolled out a year ago. We have a new one that is just about done, which will incorporate all of our storage websites. We have two storage companies. One is the Safe Deposit Box company up in Canada in Brinks, and the other is just a normal one. And that website is precious metal, singular, not metals, preciousmetalstorage.net. Preciousmetalstorage.net. You'll find the Dallas custody agreement on the downloadable forms page.
I want to give you a chance here to run through our brand new weekly specials. People are getting excited about these because I've been waiting for a long time to see Silver Eagles show up. So I'm going to share that. Here we go.
Oh, good, because I don't know what they're.
Yeah, here you go. There's the Silver Eagle one.
Yeah, well, and there you go. While supplies last, I mean, and they're actually, they're in stock, so it's good because they've been tough to get lately. So I don't know when we'll stop getting allocations. I think we're probably already into November. So um, this is as good of a price as we've offered them for in on a special in probably I don't know, probably 4 years. So my
I think there
favorite
was,
coin.
yeah.
I mean, my favorite coin. I love the silver eagle more than anything. And if I had a choice to buy one silver coin, period, it would either be this, the Morgan silver dollar, or the silver eagle. I don't know which one I like better. I love them both, but my favorite coin, by and large, bullion coin for sure.
And we also have 1 ounce gold bars here.
Yeah, these are pretty cool. The Year of the Dragon bars. They're very neat. Argor Herreris, just a major Swiss refinery, and very standard, straightforward. Except they're a little bit special because of the Year of the Dragon. So again, very inexpensive way to get gold. Really, gold's not very inexpensive at all anymore, but this is a very practical way to do it.
We're grateful, Andy, always for your presence here. Folks, thank you for
And I
being
am of
in the
you as
chat.
well.
And for everyone who's in the chat, remember that half of our viewers are not yet subscribers on YouTube, so you don't get notified by YouTube of our posts and everything. So just click the little bell, the little subscribe button and the bell to notify you, so you'll get notified by YouTube every time we pop up a new video. And we are publishing a lot more than we used to, folks. I know it used to be when I was just running the channel 3 times a week. My son Elijah joined me. We went to 6 times a week. Now we're doing matinees at noon Eastern and the main nightly show at 8 p.m. Eastern. So we're doing almost, well, 9 or more shows a week now. So you don't want to miss any of that. And you can get on our free mailing list at libertyandfinance.com. That's our home page, libertyandfinance.com. Put in your email address, click submit. Make sure you confirm on the confirming email. You'll get one email in your inbox per day with all of our interviews, including all of ours with Andy, which we sometimes have to reschedule. So you don't want to miss that. And all of the weekly specials are in there too, so you won't miss that either. And Andy, our audience, they're loving you. We have already 4,500 views here just since we started here, and right now we've got over 1.3 thousand viewers watching us. So the I've noticed just a spike in increase in interest. People are really getting concerned as we head into the historically volatile fall season. October is typically the witching month for the markets, and people are concerned about the elections coming up in early November. People are watching the
Let's
BRICS
not forget
summit
the
in
BRICS
October.
meeting October
Yeah.
22nd, I think. Less than a month away.
Yeah,
I
there's a
mean,
lot going on in geopolitical hotspots around the world. So we're here for you, folks. We will continue to increase our productions as frequently as is necessary to keep on top of these breaking stories and trends, and keep our new and recurring guests here for you. And Andy is probably one of your favorites here. So, Andy, thank you for joining us every week here for
always
this
my
weekly market
pleasure. You
update.
guys are the best, and don't get blown away. Then again, I hope you guys missed the hurricane altogether, and look forward to picking up where we left off next week.
Very good. Thank you, Andy, for joining us. And thanks everyone for
Bye,
being here.
everybody.
God bless you all. Take care.